Welcome to your weekly market update, where we talk about everything mortgage and real estate related. We have some great information to talk about as always, so let's jump right in it. First off, CoreLogic reported that Q3 equity increased by 6.8% year over year, which is due to the combined impact of amortization and appreciation. The average loan to value was 42%, which means that homeowners had 58% equity in their homes on average, which is very different than the housing bubble years where the average loan to value was 81%. Negative equity decreased by almost 8% year over year, with only 2% of mortgage properties in negative equity. When factoring in all homes, including those owned free and clear, homes with negative equity are a fraction of a percent. Now, as for mortgages and inflation, the November Consumer Price Index report showed that overall inflation rose 0.1% for the month, which was 1/10 hotter than estimates of a flat reading. Year over year, inflation declined from 3.2% to 3.1%. And the Producer Price Index report showed that overall producer inflation was flat in November, which was 1/10 below estimates. Year over year, producer inflation fell from a downward revised 1.2% to 0.9%, which was even lower than the 1% expected. The Fed pivoted at yesterday's meeting, completely changing their tone and signaling rate cuts next year. The Fed sounded more dovish, saying that meaningful progress on inflation has been made and downgrading their view on the economy. Powell outright said the Fed will not be waiting for inflation to reach their target before cutting, and would do so well in advance of its to account for the lags. When asked what inflation would have to be for the Fed to cut rates, he did not commit, but it seems to us that if we get under 3%, the Fed would be given the green light to cut. The Fed is finally starting to look a bit into the future, which is a good thing. Unlike previous reports, Powell did not try to downplay the market's expectation of cuts next year. The MBA released their mortgage application data for last week, showing interest rates fell from 7 1/8 to 7% and are now about 5/8 higher than they were this time last year. Purchases were up 4% last week and are now down 18% year over year. With the move from the Feds yesterday, we are starting to see rates in the mid 6s. We are definitely moving in the right direction. Thanks for watching.